Fortune magazine has previously described Novo Nordisk as starting a weight loss revolution. Others have described their leading product, Ozempic, as being a potential wonder drug reshaping the world. Even some have questioned if it's a miracle cure, especially as its designations have expanded from diabetes management to obesity, potentially cutting heart attack and stroke risks. And yet investors are surprised, some even shocked, to see the share price lose over half of its value in just the past year. This is due to multiple effects, and yet many are wondering, does this mean it's potentially in the bargain bin? Is Novo Nordisk now in the deep value territory? Where does Novo Nordisk potentially go in the years ahead? And why has it sold off so significantly? I'm going to cover all that and more in this video. My name is Daniel. You're watching Unrivaled Investing. We're talking about Novo Nordisk. If you enjoy educational investment content, I do appreciate you hitting that thumbs up, hit that subscribe button. Let's start with why the share price has fallen so significantly, because I believe it is sort of a Lollapalooza effect. Many different variables going on all at the same time. Then we'll talk about the underlying business. And then lastly, towards the end of this video, where I think the share price has the potential in the years ahead, talking about a range for the share price for Novo Nordisk. As always, thank you for watching Unrivaled Investing. Let's dive right in. So the key reasons why I think Novo Nordisk has sold off is because of the threat of competitors upping their game. And recently, Eli Lilly has talked about phase 3 results that have showed that their products, where dealing with patients with type 2 diabetes, lost around 16 pounds or nearly 8% of their body weight over 40 weeks, which compared favorably versus Novo's injected drug Ozempic, where diabetic patients lost roughly 6%. And they're also experimenting with pills that are supposed to be easier to take than having a shot and also easier to manufacture. So the chief concern is it possible that Novo Nordisk and their key products, Ozempic and Wegovy, can be displaced by competitive pressures, particularly from Eli Lilly, in the coming quarters and years, and potentially even more competitors longer term from a time frame perspective. And then in this video, we'll also talk about how much of their business will be impacted. Another key aspect is that data from new Novo Nordisk obesity drugs have been disappointing in trials where it wasn't quite hitting a 15% threshold in terms of 15% body weight reduction that was expected. This was for a second late-stage trial of CagriSema, where there was only a 14% weight loss in 68 weeks. This was not significant enough relative to what Eli Lilly is marketing, their Zepbound and Mounjaro products. Zepbound, I believe, was targeted for weight loss. And so you are seeing this dynamic where Eli Lilly is showing arguably better results. Now, those are the fundamentals that have caused, Novo Nordisk to fall. The second part that goes hand in hand with that is if you start with lofty valuation expectations and then you say, wait a second, competition is now worse than I expected, then you get this Lollapalooza where you get both unexpected, fundamental developments such as worse competition or less than desirable clinical studies and the results saying, hey, maybe that growth won't be as compelling in the years ahead as we initially expected. So you have that. Then you also have multiple compression. Maybe investors go, I originally assigned a 50 times earnings multiple for this because I thought their growth would be just completely uninterrupted. Now there's a little bit more competition. Maybe I'm lowering that growth rate assumption, also lowering the multiple that I want to, pay for that valuation. And so maybe you're seeing, and I'd argue that's a big reason why you've seen the 50% drop. A large part is sentiment, where investors are saying, given these dynamics, I just don't feel as comfortable paying up for it. There might be growth pressures in the years ahead, not immediately, and we'll talk about their guidance. When we look at, this business, when we look at Novo Nordisk, now it really is a GLP-1 insulin and obesity care business. And you can see the red is GLP-1, obesity care is light blue. In North America, that is the vast majority of their business. On a total perspective, you could see that looking at diabetes and obesity care, that is 94% of their revenue. What's driving this business, rare diseases, is only 6%. So this is a key risk area that investors need to monitor. That said, the opportunity is just amazing. And Novo Nordisk should get a lot of credit. They are the #1 market share. Market share is something I love to look at for companies. I love to see companies with a top market share position, ideally growing market share, because that's a key signal that you are winning. And they have, 44% market share in insulin, 64% market share in GLP-1 for diabetes treatment, and GLP-1 for obesity. They have about 70% market share. So number one across the board. I like to see this, especially when I see that the number of patients, millions of patients on Novo Nordisk products that are using it for obesity are only around 2 million. This reflects that there's a huge opportunity, as the number of adults with obesity are around 800 million now, expected to go 1 to 1.2 billion adults with obesity. That is a lot of donuts, a lot of cheeseburgers, a lot of pizza in the years ahead. And so going from 2 million adults using Novo Nordisk, it's easy to see that that could easily be 30 million or possibly 100 million in the future if you're using it to tackle a problem that has a starting with a billion type of figure, 1.2 billion in the years ahead. So clearly, this is a major growth driver in the years ahead. And not only is it a major growth driver based on their current portfolio, they're obviously investing a lot to make sure that they have the right obesity tools for the years ahead. So there's a lot of different products, a lot of different variation that you're seeing with their obesity development pipeline. And I already talked about how CagriSema was a little bit disappointing in terms of their results, but they're trying a lot of things to see if they could tap into this huge market. Looking at it, there's obesity care, 800 million people currently, as I already mentioned, 1.2 billion. They are expecting, though, to grow, their rare disease business, because currently, 0.6 million people with hemophilia. They're expecting rare diseases to scale up over time. There's a lot of different components when you're looking at Novo Nordisk, but clearly the key aspects, when you're thinking about it, is obesity care and diabetes. They are making other bets on rare diseases and cardiovascular and emerging therapies, but at this point, it's just insignificant relative to the cash cow in terms of how this business is valued, which is diabetes, obesity care, insulin. Thinking about their outlook for the year ahead, this is what management has previously guided to as of February, where they talked about 16 to 24% growth, significant profit growth of around 19 to 27% growth, and also expecting significant free cash flow of around 75 to 85 billion Danish kroner. This is once again a Denmark company, so Danish kroner. This figure translates into about $12 billion in free cash flow. This is a cash cow, and relative to their market cap, which is currently around 260 billion, that suggests they trade around 21 times free cash flow, around 15 times forward earnings. I'd argue this is a very, very reasonable valuation multiple. This is a very reasonable setup. It went from arguably expensive, where everyone said, hey, wonder drug, revolution, just incredible growth in the years ahead, to hey, this seems like very reasonable multiple for this type of business, around 20 times free cash flow. To think about the logic a little bit, if you have a company, let's say, trading at 20 times free cash flow, invert that for a second. So 1 divided by 20, that's around a 5% yield that goes to you either through buybacks or dividends. So you get that 5% a year through buybacks and dividends, and then you could get potential growth. Maybe you get 5 to 10% plus growth in the years ahead. Very easy to start penciling out. Maybe 10 to 15% type of returns over time, and that only assumes 5 to 10% growth. That also gives zero credit to potential multiple reinflation or re-expansion in the years ahead. If multiples just stay where they are, you're talking about 5% from the free cash flow and then the organic growth that they have. So that is a recipe that will get a lot of mega cap investors interested, especially in an environment where they're worried potentially about recession risks. So I see this, and it would not surprise me, based on this framework, if it does well in the years ahead. And we'll talk about more about their valuation in just a second. First of all, let me, I'm going to share more on my thoughts in just a second. First, as always, this is not financial advice. And also a quick plug. Recently, Dominic, a premium member of the Unrivaled Investing community, shared the following. This is a direct quote. I've been investing for about 6 years, and early on, I was just getting lucky. I had absolutely no idea what I was doing. Since joining your community in 2022, it has become by far the most valuable source of education for me. This follows Michael, who said, so far the subscription has paid for itself in 3 months. Looking forward to what the future holds. If you're looking for compelling investment ideas, come check out Unrivaled Investing. Prices for the premium tier will be going up soon, so come and lock in the favorable rates. It will never be this pricing again. Prices just go up over time. So looking at Novo Nordisk, this has the beauty of really an exceptional business. I mean, this line here shows their margins and it ties to this percentage of sales. You can see for years it's been around 40% plus. This is just incredible. And the bar chart shows operating profit just up and to the right. I love to see it. Wide profit margins, just fantastic type of business. And you could see not only are they generating meaningful profitability, but for decades, not 1 decade, not 1 year, not 1 quarter, for decades, they've been returning free cash flow to shareholders at an increasing rate. So you can see their dividend per share has been going higher over time. So I love to see that shareholder-friendly approach. When I think about the valuation for Novo Nordisk, currently around $58 per share NVO, converting it into the Danish kroner, thinking about, the fact that it trades around 15 times forward earnings, I do think that the valuation is actually quite reasonable, as I was just calling out. If they're able to get only 5% growth over let's say the next 5 years and assume a lower multiple, around 12 times, given their free cash flow that could potentially go back to shareholders, effectively is saying maybe you get, break even, maybe a little bit better than break even. But if you're able to get some sort of multiple expansion and they're able to tap into what I think is a huge obesity market, and they're able to get 15% growth along with the lines of what they're targeting for 2025 and say, let's roll that out for a few more years of 15%. Then, and similar margins, I'm not even, assuming significant margin expansion. I'm assuming margins stay in the 40s ballpark. Then, you could have just a tremendous return in the years ahead, talking about, 100, 200% plus upside type of potential. So this is the type of reward, the risk reward, that I do like to see. So it does, I'd argue, pass a compelling valuation, check when I'm thinking about the valuation. Now, this is the key part that investors need to think about, which is that this is the line that gives me a little bit of pause, which is this is obesity care. They previously had, around close to 100% market share is what this line is showing, but that it's been dropping recently. And this does suggest the potential impact from Eli Lilly and others saying, yeah, we want to offer alternative solutions. And, that concern is whenever I see that market share dropping, it is sort of a red flag. Oh, there's competition. And you should expect competition, especially for what could be a multi-trillion-dollar market in obesity care. And so the question is, will the dollars amount, here it is in Danish kroners, will this offset any sort of, continued market share losses that drives absolute growth? And that's going to be the dance that's going to occur in the coming years, which is the overall market grows significantly, but Novo Nordisk possibly loses market share. So lose market share, but market grows. Can you have overall sales continue to grow? Can you have margins stay, flat in the 40s percentage? Operating margins 40%. That's just fantastic, by the way. Very few companies, have that type of figure. So that's the key thing to think about. I think as you look at this business, for the years ahead, another key aspect for investors to consider is that there's, I think, a saying that it's only the whale that breaches that gets harpooned. As you have a company that says, look how successful Ozempic is, look how successful Wegovy is, and look how fast it's growing, it's going to get attention, especially from insurance, from government payers. Medicare is obviously saying, yeah, there's a lot more people looking at this. Maybe that means we need better price negotiation. Could that result in lower margins in the future? So that is the uncertainty that I think investors have to deal with if you're going to be part of that journey, where you're going to say, okay, maybe that valuation framework, if you believe competition is going to result in much lower margins, I would say you have to reset, because that my framework that I just showed, once again, hypothetical, stock price go way higher, way lower, it depends on sort of the existing framework not being disrupted. If you see margins drop to 20%, that's a different picture, and I'd argue the stock price could go a lot lower. So far, there hasn't been indications that will happen. That said, headlines that the government's looking to effectively play hardball or be more aggressive on pricing, that doesn't help margins. Another key aspect, and this is something that gives me pause when I'm looking at pharmaceutical-driven, drug-driven companies, is that there are these patent cliffs, and Ozempic has US, EU patent protection through the beginning of 2030, 2031, 2032. ultimately, Peter Thiel once talked about in his great book, 0 to 1, that the vast majority of a company's value comes from its durability. What do you think its free cash flow could be in the decades ahead? Because that affects the multiple that you're willing to pay for it now. And so when you have Ozempic, Wegovy being this dominant driver of this business, and then you start talking about, oh yeah, there's patent protection cliffs in the years ahead where profits just get completely decimated, dropping by 70-80% in a year, that just makes it tougher. And I frankly don't like those types of businesses. So it's probably not right for my personal investment journey, because I don't like dealing with these mental, games of thinking about, oh, in, X number of years from now, there's a cliff that they're going to have to deal, and will they have another product come in that, sort of offsets it. So as I go through my checklist, we'll talk about aligned management in just a second. I'd say it potentially has a compelling valuation. It does have obvious growth potential. And this is the checklist I use on all companies, whether or not it's a, penny stock to a mega cap like Novo Nordisk. And the reality is this does whittle 90% plus of the companies out there. So overall, I like what I'm seeing with the valuation and growth potential. There are some blow up risks potential. In 2024, semaglutide, which is the active ingredient in Ozempic and Wegovy, this was, roughly 60% plus of their sales, so even more on a profit perspective, so 70% plus from a profit perspective. If this is disrupted from competition, I would say, what their profit looks like in the years ahead could be quite different. So a lot of uncertainty on what that competitive picture does look like. Let's also talk about the aligned management. So I would say question mark for no blow up risks. Less certainty there than I would like. From a management perspective, you have a CEO, CFO that have effectively, this is their career being with Novo Nordisk. Looking at the CEO, he's been with the company since 1991, and he's been in several different roles as an economist, worked his way up to CEO. Then the CFO's been with the company since 1999, started as a business analyst. So overall, I have mixed feelings about this. One is I do love to see, effectively career players at the company. That is a favorable data point. And the fact is that, he's been the CEO, Jorgensen's been the CEO since 2017. So a lot of the success they've had in the last few years, you should give him some credit for it, a significant amount of credit for it. And so, the overall management, I would say this is pretty good management that I'm looking at. I like to see this picture. That said, there is an element from an aligned management perspective that does give me pause, which is that, this effectively it's run by the Novo Nordisk Foundation, which was set up a long time ago, decades ago, and that effectively owns, it looks like around 38% of the cap or 28% of the capital, but has majority of the vote. And their mission, it appears is to, promote public health and promote societal sustainability. So it's all about taking the dividends from Novo Nordisk and then spending it on their various different grants. And, when you have a foundation that's effectively governing a company, it's obviously going to be, in my opinion, it's going to be less likely to go for those sort of bets where you say, hey, this is the growth initiatives. This is the, trajectory on how we're going to go 10x bigger in the years ahead. Because when you have a founder running a business, this is their baby. This is the love of their life. This is what they're focused on. Whereas when a foundation is running it and it's about, hey, we need to make sure we get our dividends, and so that way we can, feed our different projects, and they might be very noble and worthwhile projects. But when I look at that, it's a different risk profile. And ultimately, so far, I wouldn't say that it's a red flag. It's just something to be mindful of. So overall, as I'm looking at the checklist, I would say aligned management, yeah, management has done pretty well, but I'm not crazy about having a sort of foundation controlling it. Not crazy about it. Clearly, the stock's done well, so it hasn't been a big red mark. And from the no blow-up risks, concern, that's another concern, especially when you have one product or one active ingredient really driving their growth and profitability. So that probably does make it too hard for my own personal journey. That said, if you were to say, Daniel, you have to make a call, thumbs up, thumbs down, or sideways, just too hard, I would probably give it a thumbs up approach, because relative to most of the companies I look at, it doesn't have this sort of mammoth free cash flow tapping into this huge opportunity with management that has delivered. So overall, would not surprise me to see several of the large institutions start buying more Novo Nordisk, it would not surprise me if the stock either outperforms the S&P or, does in line. I suspect it could do much better than the S&P over time, just given this framework, given the setup. It's not right for my own personal journey. There are other things, other bets where it meets more of my checklist with the founder and growth potential and limited blow-up risk. But that's what I'm calling out, for my subscribers at Unrivaled Investing. Overall, though, I do like Novo Nordisk. Looking at the setup, the challenge is what does the obesity market look like in 2035, and that's a decade from now, and that uncertainty will ultimately weigh on the valuation of Novo Nordisk. So I wouldn't expect the valuation to expand dramatically where it once was. It wouldn't surprise me if it stays in the sort of the 15 times range where it appears deep value, appears cheap, just because of that uncertainty of what's this look like post patent cliff. I hope this video has been helpful for you talking about Novo Nordisk. Thanks so much for watching Unrivaled Investing.